All right, we are live now. Welcome to yet another episode of Markets and Nonsense. As usual, I'll be the host. I'm Chavan, and along with me, the founder strategist of Indiacharts, Rohit. Uh, Rohit, nothing much, no movement. Uh, Everything is going into sideways right now for the last 1 week. I'm talking about last Thursday to this Thursday, but yeah, trade war continues. Inflation data was good, uh, but there are talks of again, U.S. recession. So, a lot to discuss. We can take it up one by one. What do you feel? What is your view now on the markets? Uh, you're still bullish, or is it like you want to, see and watch now as to where it goes? Because there's no movement hardly, and it's whatever the movement was there, very difficult to find an impulse. Yes, it's all yours.
Very difficult to find an impulse in the hourly chart.
Hourly, yeah, hourly it is there, but yes, yeah, go on, Rohit. It's all yours. Yeah.
No, I wanted to know why you said no, very difficult to find impulse. I wanted
Uh,
to understand that.
See, for me at least, it was difficult to count five, even though I saw some analyst, Elliott wave analyst counting it as five, but for me, at least it was difficult. But yeah, what do you feel? Hourly, it's a five wave.
Uh, the beauty about lower and lower time frames is that the noise level goes up,
Hmm.
and then as the noise level goes up, it becomes easy to justify either case. I can justify five wave up. I can justify three wave up.
Hmm.
So very long back, I had very early on in my Elliott wave analysis, I had made the daily time frame as the uh, most important time frame.
Correct.
So it's sort of the final fallback is on daily.
Hmm.
Of course, we verify with multiple time frames, match and go back and forth. But in the end, I found again and again that at least in India, it works pretty well. The daily chart says something, it is something. So,
Hmm.
more than whether this is a five-way rise, the important question is was the fall from the 5th of February when we made a high of 23,807 all the way down to 4th of March, three waves.
Hmm.
On the daily chart, it is clearly three waves. And then after that, we have broken out of that downward channel of that trend. Okay. So therefore, I want to believe that this is an impulse on the way up. Okay, argument wise or not, once the downward trend is broken in three waves, I would like to believe that three down in Z, E, whatever we mark it as is complete,
Hmm.
unless there is new proof. Now, surely in the very short term, 20 DMA not crossed. So that is today reading at what 22,589 or something, 590 let's say. 22,600 we dal dete hain just to be an approximate. So unless we cross 22,600, sure there can be a short term dip in the market next 2 3 days. You may even retest the previous low. Or you may retrace 60% of this rise. That is definitely possible. But I am, if you ask me my preferred outlook, I'll say you will not going to see a new low. That's how I will approach it. Of
Okay.
course, this is a market. People can say anything is possible and argue, buy, argue. But if I
Hmm.
have to take a bias and I have to have a view, I would say a new low is out of the picture.
Hmm. Okay. Fine. And okay, so last week you said that okay, metals is the sector to watch out for. You still continue to watch out for metals?
Absolutely.
Okay.
Absolutely watch out for that. You see all
Hmm.
the volatility we saw over the last 3 to 4 days. There were 2 days at least where US markets lost thousands of points in terms of the Dow. You know,
Hmm.
we had 2 to 3% down days on the Nasdaq. In all of that volatility, commodity prices have actually not taken such a big beating. Copper
Hmm.
prices just went back to the 20 DMA, bounced back. Gold prices went below the 20, almost touched the lower Bollinger Band, bounced right back and took out the recent high. Same with silver. Okay. Uh, hardly anything has happened in aluminium. I mean, the only commodity which is down is oil, which is because US has made that decision to overproduce and
Mm.
keep it down. So, so when we say metals, and which is basically we're talking of basic metals, if the basic commodities are not reacting, there are one or two reasons for it. One, either everybody is wrong about economic growth, or two, everybody is wrong about monetary policy. There are two drivers of commodity price, right? We used to call copper Dr. Copper.
Mm.
Uh, and the reason they used to say Dr. Copper is if copper prices are rising, economy is good. If copper prices are falling, it's a lead indicator of a weak economy.
Mm.
So your Dr. Copper is not showing anything, any signs of a weak economy. So if you say copper prices are up either because of economy or because of monetary policy, you can say that, okay, because you're easing, dollar is falling, bond yields are going down, therefore commodity prices are going up, which is an indirect way of anticipating growth. Ki weak dollar, low interest rates will eventually drive growth, so copper prices are up in anticipation. Now, one way
Mm.
or the other, we are saying that Dr. Copper's giving the thumbs up to the market. So automatically the metal sector cannot go out of picture. In fact,
Mm.
I'll tell you one surprise element, and I listen to a lot of YouTube interviews. Post COVID, when we were the first ones to ride the reflation trade and be bullish on metal sector, when I used to listen to various fund managers, they would all say, no, 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 not metals, because cyclical sector moves wildly. We don't want to get into it. Metal stocks went up sixfold. This time round, to my surprise, I've at least heard a couple of them saying we want to buy the metal sector. I
Mm.
met even mid-cap fund managers recently who are holding on to stocks like Hindalco and so on. So metals is now actually in favor. This is the interesting change in
Mm.
sentiment, and that is indicative of third wave phenomena. Because in wave one nobody believes it, in wave three everybody starts to believe.
Mm. But are you worried about the US markets now? I mean, do you see a double top over there, breaking out from a double top? A
So
major.
we had this very interesting discussion last time about fear and greed. When
Yeah.
everybody is fearful and the whole street is fearful, then you should be positive. The US, we went through that last month
Mm.
and got the fifth consecutive down month. Now US is going through that with a lag. Right now, the
Mm.
sentiment in the US is ki khatam ho jayega.
Mm.
So
Everyone is calling for a recession. So yeah.
yeah, people are beginning to call for a recession and fear and everything, and the yield curve is steepening and whatever.
Mm.
But I don't know. I don't think we have enough data to really justify one way or the other. I'm beginning to feel that. Uh, See, I don't know about. Let's say that we don't know about the US. Okay, we don't sit there. We don't track that economy so closely. We don't understand the government actions from a distance. We generally know some things. Like we know that US wants to spend less. That is what Doge is all about. If you spend less money, it can cause a slowdown. Is a slowdown going to be equal to a recession? Because recession has been defined as two negative quarters of GDP. You can get a slowdown in GDP growth from 2.8% to 2.3%. That might still not be a recession. So, will the actions of the US to spend less, to tax more foreigners, tax less domestic, be equal to a recession? I will actually need to speak to a good economist because I don't do the data analytics for US that tightly to be able to put that equation in place and say that yeah, this is equal to no growth. But I think one thing which is coming out, and I've heard a couple of the US hedge funds say this, is and which we can accept more easily. US underperformance and non-US outperformance. Okay. This makes more sense because we are saying US slight slowdown because of Doge and whatever. So therefore, if high valuations are there, then okay, it consolidates for a while. But in the meantime, because the actions that they are taking are resulting in a weaker dollar, are resulting in lower interest rates, it benefits emerging markets,
Mm.
emerging market currencies, commodities, and in fact, countries that are willing to expand fiscally, which also includes Europe. Because Europe has now moved from 10 years of austerity and tight fiscal consolidation to expansionary fiscal policy. and which is why European stock markets are closer to all-time highs than the US stock market right now. In fact, for the last 1.5 months, they are the best performing market in the world.
Mm.
So this shift away from US is actually a reality. The day, in fact, and Ritesh Jain also tweeted it, and I probably mentioned it on my X profile also. The day you had that 900 point Dow drop, Asia was flat. Some parts of Asia were even up.
Yes.
Japan went down, recovered all the losses, and formed a hammer candlestick at the bottom.
Mm.
So it's pretty clear that the world is not reacting to what is happening in the US. So this is not a credit event which is contagion and the whole world will fall apart. This is like, ठीक है, US अच्छा नहीं कर रहा है ना, पैसा कहीं और लगा दो. This is the
Mm.
event.
Okay.
Now वो कोई और कौन होगा, you can argue कि नहीं इंडिया को नहीं आएगा, चाइना को रहेगा. Now that's a different argument we can make.
Mm.
इंडिया पैसा लेगा कि चाइना लेगा कि यूरोप लेगा, थोड़ा बहुत तो सभी लेंगे. But you can have that counter argument if you still want to be anti-India investment. But the argument that US गिरेगा और उसके साथ सब लोग गिरेगा is not the argument. Right now, that's not working.
Speaking about the data, Rohit, you mentioned data. One more sentiment. DI is 59,000 contracts, all-time high. All-time high?
Yes, it's an all-time high.
Yeah.
I'm going to
Mm.
share my screen.
Yeah.
I don't know. Let me know if you can see it. Can you see it?
Yes.
So this is the DII chart. Yesterday's number is 59,000, some 136 or something, or 236, something like that.
This is
Uh,
all-time high. Mm.
it's an all-time high position. Even day before's was all-time high. Yesterday's even further all-time high. This basically goes to show that domestic institutional investors are extremely bullish on India now at this level. They are willing to they're betting their money on it.
Mm.
And you can hear that in the language of couple of them who had created cash are all saying we are deploying now. Okay, you can check it out, YouTube interviews, and so I've been listening.
Mm.
So this is reflected in their positioning. And history shows that every time DIIs have been excessively long simultaneously with FII. So let's put it on the same chart and make it interesting. So
Mm.
FII futures position. Okay. And now let's use the highlighter to highlight this situation. Okay. But actually, I like to hide this too much of data over here. Yeah, I don't know how to. I'll have to spend time understanding that setting. But let us just highlight this point, this point, this point, this point, and where we are today. This.
Mm.
Okay. So this is here, this is here, this is here, this is here, and this is where we are today. Now, each of these points, what do FI is doing? Here they were slightly short. Okay, first red
Mm.
line. Here also they were at the first red line. Here they went to the second one. This was the highest at that time during COVID.
Mm.
Then again in March 23, a new high short over here, and now this is all-time high record short versus long. So every time we've had this situation where FII, DII are at opposite ends of the spectrum, the winner is
Doubles. Mm.
DII. India is winner,
India,
and
yeah.
that's true since 2018. So anybody saying retail will be wrong this time, I'm sorry, the data doesn't agree with you, so I will not agree with you. This whole theorem that retail is coming structurally since 2016-17 with, mutual fund sahi hai, whatever logic you give, they've even come through personal account openings post-COVID. Whatever way they've come, it has become a strong support for the market. And it is working.
Mm.
And DIAs, when they are showing that confidence, it's working. So मुझे क्या करना है? We have to have a data-driven approach.
Mm.
I'm not here to prove who's right, who's wrong. Data ऐसा बोलता है, मैं करता है, खत्म बात.
Okay.
DIA right, forget it.
Yeah. Talking about one more data point, Rohit, again, the inflation data. How do you see it? At 3.6, IIP data at 5%. Quite surprised.
Yeah, so a few days back, WPI came in at 1.9%. Now, finally, retail. So, no, it's not a surprise because at the start of February, when RBI did the rate cut, they said this. They put out their forecast that they could see retail inflation coming down in the first quarter, and that is why they took the call to start cutting rates. They do see it, maybe stay around the same levels or pick up a bit also later, but they don't see a significant uptick basically.
Mm,
So flattish inflation, and if we are lucky, and inflation goes down because oil prices are down and so on, and rupee starts getting stronger, then you've created a case for multiple rate cuts in the year ahead. So some people are already forecasting 2 to 3 rate cuts by RBI during 2025. So this is just good news. That's all. It's good news. It's in a particular direction, and that IIP is strong is also a good news. So you have both things happening simultaneously: growth plus slow inflation. That's a very positive thing coming out. The market is just taking its time to respond.
mm. What about DXY, Rohit? You
So
know,
DXY has been falling for quite a
yeah,
while.
yes.
If we just look at the DXY chart, pretty steep fall. Okay.
Mm,
In fact, the weekly chart also shows breaking of the weekly averages. We
yes.
are at the weekly lower Bollinger Band. So in the very, very short term, I do
Mm,
think there's a possibility you can get a small bounce in DXY, but eventually it goes lower. Okay, so
mm,
so that very short term bounce may give you some pullback, setback in markets, if at all it bothers. I mean, see, the larger trend is usually more important.
mm,
On that particular day when market falls and DXY is up, we will all correlate, but it's really not important on a short term basis. But overall, it's in a downtrend. So weekly RMI is in sell. Monthly, we will only come to know at the end of the month. We are trading below the 20-month average. Okay, but if we close below that, so let's give that level for people to watch till the end of this month, which is going to be at 104.35. So if
mm,
we close below 104.35 for the month, I think that would be a bearish sign for the DXY. And this is much after the RMI turning bullish in November, December. That is when I thought probably the dollar has gone into a more bullish curve than I was originally anticipating. I was originally thinking it will be a B wave. Then I gave up because of the RMI and cycle, but it didn't last. And then once it started falling, we've changed again. Our original B wave is right. And
mm.
if we are going down in a C wave, then it continues. So breaking the 20 would be one sign that we are into C wave. Uh, and that can mean going below 100 also eventually. So that's good. No, that's good for the rupee. For the
Yes.
rupee, now look at this. It made an attempt to go to a new high, but it hasn't.
Mm,
I could very well eventually argue that one, this is two, you know. So no new highs in USD INR when Nifty was making a new low at the end of February. That's an intermarket divergence right there between equity and currencies. Pretty common. It happens many times, and it's often a signal of a trend reversal. So we pretty much have that signal also.
mm. And RMI is in sell? Yeah.
Daily is in sell. Weekly can go into sell today, being the
Mm,
last day of the week. Tomorrow is a holiday for Holi, so long weekend ahead.
mm,
That's another reason why markets may be dull today.
mm,
Apart from that, they haven't crossed the averages, but it's also a long holiday week, so probably that's keeping the pressure. Nobody
mm,
wants to buy before a weekend, especially considering कि ट्रम्प आके वीकेंड को भी क्या बोल देगा पता नहीं.
mm.
you know so yeah, but we
Okay.
could get a weekly sell signal.
Mm. All right, Rohit. But okay, so okay, we'll see how the market goes. We can open up to the audience for the questions.
Yeah.
You can comment, and yeah, we are already 20 minutes. Time is running fast, so anyone having questions, you can just comment. The current corrective moves. Does the US underperformance argument still stands from this level? SPX is at 5,500 now. Hmm.
I didn't exactly get the question.
With the current corrective mode, does the US underperformance argument still stands from this level? SPX is near 5,500. It is underperforming now. I
It is
mean,
underperforming world markets, but
mm,
not India because India anyway has not picked up.
mm,
Okay, so of course, right now to say that India will outperform US is a prediction rather than anything else, based
mm,
on the idea that US is going to tighten spending versus Europe, India, China are going to expand spending. I mean, it's a very simple argument.
mm. Okay. And Rohit, if we have to do position sizing, is this the right time? This calls for a
So,
position sizing ultimately.
your question is without taking into perspective what is the position. I mean,
Okay, if
position
you
could be a trade, an investment, Nifty, and there's
say
so
like,
many
no,
portfolio.
say like, we are looking at a 1 year, 6 months, 1 year investments. Okay, so when you say that, okay, this is the bottom, so ultimately you suggest do position sizing from here onwards.
I
Sometimes if it
started,
doesn't work out,
I
long
started,
exit.
I
Hmm,
started when we wrote the long short report on the 15th of March.
hmm, wow.
So I can only speak for myself.
Okay.
I've been buying since 15th of February. So since
Hmm,
15th of February, I've been buying as far as investing is concerned.
hmm,
So people want to start now, you start yesterday, you start tomorrow. It's never too late to position size. I mean, the view is already there. Now, after that, yeah, position size. Sure.
hmm,
What position and what percentage is a process that you have to learn.
hmm. Okay, what are your thoughts on launching of chemical index? By the way, NSE has launched a new index, chemical index, Nifty chemical index. Now it will be
Good, good. We'll have one
not.
more index. There are so many they have not launched. They don't have
Yes.
an OMC index. They don't have a what do you say? So many small micro sectors.
Hmm. Okay, Rohit. Any ending
They
statements?
could have a sugar sector index. Why don't they have one? They should have a dozen indices. I mean,
Yes,
if you can have a bank index with only 12 stocks, I think there are more than 12 sugar stocks listed in India.
absolutely.
That's how bad it is. So why don't we have an index for all the sectors that trade?
Hmm.
I really don't know.
Okay. Hmm. Any guesses of the time when this impulse wave will materialize at the earliest? Hmm.
It's already materializing,
Hmm.
in my opinion. Materialize means by the time 5 will complete, 1, 2, 3, 4, 5. You can't put a time to it. I mean, April.
Okay. Fine, Rohit. Let's end this. Any ending statements, Rohit?
Yeah, people seem to be asking the same question. Rohit, any views on 22,000? Aega, nahi aega? We've
Hmm.
already answered that. I've already said that I don't expect a new low. And versus I expected previous time or didn't. The whole point of being in the market is being able to change your view as changing data.
Hmm.
If you can't do that, that's worse than you said so and you need to stick to it like some chewing gum.
Hmm.
That's the worst thing that you can do. Then you become perma this and perma that.
Hmm.
So let's not go into perma camps. Learn to change. That's true in every field, right? Even in management, they teach you learn to change. Change is the only uh,
Hmm.
constant. I mean,
Hmm.
it applies to every field. Who moved my cheese? Small little book written 100 pages. Concept is same. So somebody moved your cheese. You better move. And in the stock market, you better learn how to know when the cheese is moving. That's why we
Hmm.
do all this macro analysis. Where is the dollar going? What is this happening? That happening? Is to be able to get that perspective.
Hmm.
But when you're trading your own market, last statement is when you're trading your own market, if you're trading Nifty, the lesson is watch the Nifty. Okay. Don't wake up at 12 in the night and say Dow kya hai. That will give you the wrong perspective.
Hmm. Okay, fine. Thank you, Rohit. Uh, you're sticking to your guns, and let's hope it works out. Fingers crossed, and we'll see how the market reacts. So with this, let's end the episode. So to all the viewers, thank you so much. We'll catch up next Thursday, same time, 2:30 p.m. Keep watching the show, keep commenting, and yeah, of course,
And
don't
if you're on
forget. Yeah,
YouTube, don't forget to subscribe and like on the videos. And
yes,
if you're on X, then share it with everybody and
yeah,
follow at India Charts and at strike
strike
underscore
money.
money or
Yeah,
strike money.
strike dot money. Yep. Okay. Yeah. Thank you. Bye bye, everyone.